needed a salary, you needed a 9 to 5. Otherwise, banks would just say, come back later. But did you know 36% of Americans now earn at least part of their income outside traditional employment? That's right, the side hustle is real. So lenders evolved or they vanished. Whether you're ready now or just starting your journey, we're here to walk with you every step of the way. Hey family, Des Losberg here on the Purchase Path by Azcension Homes. Tonight, we're going to be talking about myth number 3. It's a fresh myth, a fresh demolition of the 3 top reasons why most people continue renting and they don't buy. So tonight's target is the belief that your income isn't stable enough to get a mortgage. So whether you're a gig worker, a freelancer, contractor, tipped employee, or a brand new entrepreneur, this episode is for you. I'm going to show you 7 lending doors, including a true no-doc CDFI mortgage where you don't have to provide any income or tax returns. And stick around to the end because we're going to give you a 5-step income readiness plan that you can start this week. So buckle up, grab a notepad, and let's smash myth number 3. So let's talk about why this myth survived. Well, back in the day, mortgage rules once worshipped the W-2 paycheck. You needed a salary, you needed a 9 to 5. Otherwise, banks would just say, come back later. But did you know 36% of Americans now earn at least part of their income outside traditional employment? That's right, the side hustle is real. So lenders evolved or they vanished. They had to capture this market share. And today, because of it, we now have 3 documentation tiers. We have the full documentation, a prime/alt documentation, and a no-doc/CDFI non-QM option. Now, don't worry about all the acronyms. I'll describe that later. I've been doing it for so long that it comes easy for me. But each tier opens a door for non-traditional earners. So let's start and walk through all 7 doors. So let's talk about the prime or full documentation. This is door A. FHA, conventional VA, full documentation, paycheck stubs and W-2s, the simple salary straight up employee. Now you could have 2 years of this income history and there could be gaps of employment as long as you have those 2 years. So it makes it nice and easy to qualify for. Now, Fannie Mae has actually allowed 1 year of self-employed returns if you've done similar work in W-2 beforehand. That's been a game changer. FHA will average overtime tips and part-times after 12 to 24 month long. So full doc isn't dead guidelines, it's stretched with the gig era. Now a bonus to that is if you just graduated college or you came out of some sort of certification program, we can use those transcripts and history to complete that 2-year history. So if you're a brand new student and you're out just getting your feet underneath you and you got that salary, you can still qualify. Now let's transition into door number 2, the bank statement loans or alternate documentation. Now, if you have your own business or you're a 1099 employee, we can use bank statements to qualify you. 12 or 24 months, we can calculate your total deposits and we don't need your tax returns. So if you're a hairstylist, if you're a photographer, if you're an e-commerce owner, if you are a cash basis, and perhaps the IRS doesn't quite see all of those deposits, you can actually qualify with your bank statements. However, you will need a little bit more down and rates are a little bit higher, but it is an option to document. We can actually use your 1099. We could use your profit and loss or your balance sheet. We can get a CPA certification letter. There are so many different ways that you can qualify for where if you don't have the pay stubs or W-2s or salary employee. A lot of people don't know that. So get connected with a lender who has these alternative options, and we do have some with our preferred lending program. And that brings us to door C. So if you're 1099, for you real estate agents, we can use the gross amount on there. Do need a little bit higher of a credit score to qualify for those programs and perhaps a little bit more down payment. But for you realtors, what's really sweet is you can use the commission from the sale as your down payment. All right, let's talk about door D, the written VOE or 1-year program. So if you switch from hourly to salary, vice versa, or you switch from salary to commission, we can get a verification of employment and you can qualify. Now, certain lenders, preferably if you go with a broker, they'll have access to different lenders who allow those type of things. But if you walk into a retail bank, typically they're going to turn you away. So get connected with us. We'll connect you with our preferred lender who has these programs available. But if your type of pay has switched, you can usually get a written verification of employment to verify it. Now let's talk about the no-doc CDFI door. So CDFI stands for Community Development Financial Institution. So certain banks and lenders are certified under this program and they can qualify you under a no documentation loan. They don't have to adhere to the new rules, the Frank Dodd, the TRID, again, acronyms you don't have to worry about, but those are the laws that were put in place after the crash of '08, where it was mandatory to document your income. So if they're certified and you meet certain requirements, you can qualify without having to prove your income. They're chartered to serve the underserved borrowers and they're exempt from the federal ability to repay rule. Translation, they can approve you without tax returns, W-2s, or traditional debt to income ratios. How they underwrite is under their 3 pillars. Typically, they look at credit, your verified housing expense history, and your post-close liquidity, like how much cash do you have after closing. You typically have to have about a minimum FICO score of 600, and your down payment does have to be a little bit higher. You're probably running back into the 10, 15, 20% range. The rate does run a little bit higher, but it's great for cash-heavy entrepreneurs who write everything off and show a tiny adjusted gross income. And the bonuses, many CDFIs, layering closing cost grants, and financial education coaching. Okay, moving on to door F, the asset depletion / pledged asset loans. So you can use your brokerage balance or your crypto balance and it's converted into an income divided by a certain period of time, depending on the lender's guidelines. So if you have a large sum in an account that you can't necessarily or don't want to touch, you can use that as income. They'll divide it by 72, 84, 120 months, and they'll use that as your income. So if you have a large net sum, if you have a settlement, or you had an inheritance that you can't have access to it, you can use that as a source of income if you can't document it otherwise. Moving on to door G, DSCR investor loans, debt service coverage ratio. They only look at the cash flow of the property. Now, you can't occupy it as a primary residence, but if the rent exceeds the actual debt that you carry, it will qualify and you don't have to prove income. It's a great option to originally purchase an investor loan and then you can occupy it after a 12 or 24 month period, or you can build your portfolio with these types of loans as well. And because our price points here at Azcension Homes is palatable and under the $280,000 mark, they typically cash flow. So all you do is you take your rent divided by your total liability, including taxes and insurance. And as long as the rent exceeds that, it should qualify. All right, so now we talked about all these different lending doors or all these income alternate options for you. So basically, we demystified all the myths that are out there, gave you a plenty different options that you can have alternative documentation for. And now I want to talk about the myths within the myths. So these are what I like to call mini myths. And so mini myth A is, quote, I change jobs and lenders hate that. The reality is if the move boosts income or you change career paths, conventional lenders approve day one with an offer letter and a pay stub. So it doesn't necessarily have to be a 2-year history with that new employer. As long as you make a transition and you have received the offer letter and we prove it with an income pay stub prior to closing, you would qualify. Now let's talk about mini myth number 2, cash deposits don't count or tip income doesn't count. Well, if you claim them on your taxes or your W-2, of course they count. But two, you can use those bank statement programs to qualify by using those cash deposits. So it's a great alternative way to subsidize your regular income with your cash tips. Mini myth number 3, my commission must show a full 2 years. That is not necessarily true. Many lenders average at 12 months if your trend line is up and a base salary exists. So these are common things, the myths within the myths that I hear or heard over the last 22 years before I retired that are simply not true. Now we're done with the big myths. We gave you lending options and we talked about the mini myths. I want to talk about real life examples and proof of loans that I originated before I retired. So story number 1. Let's call her Layla. She was a wedding photographer and she used bank statements to qualify for her loan. Now, a lot of her income was via Venmo and these electronic deposits and a lot of cash. And we took her 24-month average of $77,000 a year and she qualified for a 10% down regular alternate documentation loan program and she closed in 21 days. Story number 2, Stephanie. She was a W-2 teacher and then she did side tutoring and was 1099 through the contract school. So she was able to use not only her W-2, but her 1099 income as well and qualified for an FHA loan with 3.5% down along with down payment assistance. And now let's talk about story number 3, Diego. How are you, buddy? I know this is awesome to share this story. So Diego was a cryptocurrency and he hit big. He bought I don't want to disclose what he bought at. Oh man, I'll probably have some regrets on why I didn't buy Bitcoin when it was so much lower. But his figures are well north of 6 figures. I don't want to disclose how much it was, but he had a couple different options. We could take his total Coinbase account and we could divide it by 84 months with one lender, and he qualified with that income just on that merit alone. Or he could have went with a CDFI lender and put his full 15 or 20% down, and he would qualify that way as well. Either way would have worked for him because he had not only the assets for the larger down payment, but if he didn't want to put as much down, he could do an asset depletion loan and qualify using the average monthly over an 84 or 96 month time frame. So if you do have a situation like that, it's a great way to show that you have the wherewithal to buy. You just might not have the income. I wouldn't work either if I was at 7 or 8 figures. And lastly, let's move on to our 5-step income plan. So let's talk about step number 1. These are actionable steps that you need to take or you should take to be able to have the confidence towards home ownership. So we demystified it. We talked about lending solutions. We talked about the mini myths. We gave you real life stories of people who were able to go out and buy because they had the power and knowledge and education to be able to know what was out there and what was truly feasible. So step number 1, identify what type of documentation you have. And that way you can pick which door you want to go through. Whether you're a full doc, bank statements, 1099s, you want to try a written VOE, maybe you have enough down payment for a no doc option or an asset depletion option. Maybe you want to start investing and do a DSCR. Pick one of them and choose a lender who could shop that for you and give you options based on your income documentation type. Step number 2, track and deposit everything for 90 days. So if you have a side gig, if you are in the gig economy, track what you're depositing and put it in your account. I see so many times, mattress money unfortunately will not work. If you're putting it in a safe or underneath your mattress, there's no way to document that. But start tracking your income. There is bank statement programs where you can have as little as 3 months of bank statements and we can use the average of those 3 months. So take your tips or your cash, deposit them, start tracking, and start showing those deposits. Step number 3, build a 3-month liquid reserve account. And the reason why is because this is what we call a quote compensating factor. So if you have reserves, it not only allows an easier automated approval. But with banks or other lenders, if you're using alternative documentation or you're going with a CDFI lender, they look at your reserve account, and if you have it, you're more likely to get approved. Step number 4, if you're behind on your tax returns, get caught up. Now, I know there are ways where I shared that you can qualify with bank statements or a CPA letter or maybe a CDFI loan where you don't have to document. If you're delinquent on your taxes and you might have a tax lien, that might preclude you from all these other doors. So go out, get caught up on your taxes, just file them, bite the bullet, and get caught up. Don't be afraid of filing your taxes. It'll give you the peace of mind and it'll open up more doors for you. Step number 5, once you have everything in order, your tax returns are current, you're tracking all your cash deposits, you know what kind of income documentation door you're going to go through, it's time to speak with the right lender. Now, I don't do loans anymore, but I can get you connected with our preferred lender. If Azcension Homes is who you want to do business with, we have a preferred lender with Edwards Financial that'll help you out. We also have some other lenders in the industry who have access to these programs that can help guide you along. What you want to do is you want to talk to someone who has access to all the programs. That way you can decide what's the best loan program for your specific situation. And then you can shop it around. So that concludes our myth busting number 3 of this 3-part series of the top 3 most common myths of why people are renting and aren't owning. So let's recap. We talked about the 7 doors. We talked about the income documentation, a full documentation, bank statement, 1099s, written VOVs, you name it, you got options. W-2s are optional, it's not mandatory. Track your deposits, stockpile your reserves, choose the right lender, and get started. Remember, preparation beats perfection. So thank you again for being with me today. I hope you got a lot of valuable information. Please like, subscribe, and share this podcast with someone you know who wants to take that next step forward. My name is Des Losberg. This is The Purchase Path with Azcension Homes. We'll see you on the next one. The cost of living has pushed too many families out of the communities they love. They work hard, but still can't afford enough space. Rent keeps rising and home ownership feels like a distant dream. That's where the purchase path comes in. I'm Des Losberg, founder of Azcension Homes, and I retired after 22 years in the lending industry after I kept seeing the same pattern. Good, hardworking families getting locked out, not because they didn't deserve a home, but because no one ever showed them a real way forward. This podcast exists to change that. Here you'll learn about real paths to ownership like zero down financing options, down payment grants, lease to own programs, and financing options that are actually designed for families like yours. This isn't about fluffy dreams or get rich quick advice. It's about clarity, options, strategy. So whether you're relocating, renting, or just tired of waiting, you'll get the tools and the truth to move forward one step at a time. Follow the purchase path now on Spotify, Apple, or wherever you listen and start your journey with Azcension Homes. Your path, your purchase, your time.